which is the first panel discussion. I would like to invite our moderator and our guest speakers on this panel. Our moderator is Betul from FCI. So she is the regional director of Central Eastern Europe and the Middle East. And we have very valuable guests representing the regulator part and the association, the trade association, and also the credit bureau of Turkey. They will share very invaluable practices and experiences of them, the challenges, opportunities, and also the benefits of a legal infrastructure and the digitalization of factoring framework in a developing factoring market. Betul, the floor is yours.
Thank you, Ayşen. I also welcome all of our guests today, friends, colleagues. Thank you for joining us. Now we are coming from a very developed UK market with almost no regulation and infrastructure for the regulative world, with a very developed another market with a very strong regulation and law, Turkey. From the first factoring transaction until today, there have been 30 years in Turkey in factoring sector. Today, the market is very structured, developed, and well reputed in both and in international factoring market. Today, we have 56 factoring companies in Turkey active in the market, and 20 of them are FCI members or members. And Turkish FCI members is also very, very successful in the international business. For the last 10 years in FCI's international business, Turkish factoring companies has been selected as the best export factors. So we will today listen how market is regulated, structured, what are the rules and regulations behind this successfully managed sector. And first of all, I would like to introduce my esteemed guests. I start with the ladies, Filiz. Filiz Unal, she's the Deputy Secretary General of the Association of Financial Institutions. She has almost 30 years of experience in different fields of financial institutions before joining the Turkish Factoring Association in 2010 as a Secretary General. She was our colleague. She worked in one of the biggest factoring company in Turkey, Garanti Factoring, as an Executive Vice President responsible for marketing and international departments. And she's been representing the sector to domestic and international institutions and organizations. In her present position, she takes several initiatives, such as Central Invoice Recording System, Supply Chain Finance Platform, digitalization, and Islamic factoring. And Mr. Ercan Caliskan, he's a senior expert for non-bank financial institutions department in Banking Regulation and Supervision Agency. Ercan Caliskan worked in different positions in the Undersecretariat of the Ministry of Treasury and Finance until 2006. In between 2006-2008, he worked as a Chief Banking Specialist in Banking Regulation and Supervision Agency Enforcement Department for investment banks and factoring, financial leasing, and financing companies. He served as a deputy head of department in BRSA, Enforcement Department for investment bank and factoring, financial leasing, financing companies department from 2008 to 2017. Since 2017, he has been working as a senior banking specialist in enforcement department of the BRSA. And our last speaker is Mr. Koray Kaya. He has 25 years of experience in the banking industry. He had a leading role in creating one of the scoring systems in the first retail loans in Turkey. He designed credit automation systems for customer loans, credit cards, and small business loan applications. He created the customer level good and bad definition used in the KKB scorecard infrastructure. He pioneered the modernization of the bank's customer loan approval infrastructure according to the current conditions, and he has been working in KKB as a Findex Business Management Deputy Secretary, Deputy General Manager since May 2012. So my first question will for Mr. Ercan Çalışkan. Ercan Bey, thank you for joining us. We know that you have a very scheduled days as we are coming to the end of the year. So thank you for giving us the opportunity to listen to you. First of all, we want to listen from you who is BRSA and your responsible areas. Which financial institutions are under your control? As a public authority, we want to learn which areas do you have regulations. We know that the non-bank financial institutions, the law regulates the bank-owned and non-bank owned financial institutions. So as an authority of supervision, how do you make differentiation in regulating and supervising bank-owned and non-bank owned financial institutions?
Thank you, Betul. Before I move to my question, I want to say hello all the participants and colleagues. My institution, Banking Regulation and Supervision Agency, BRSA, is an autonomous financial authority. It regulates and supervises the banking sector in Turkey. Mission of agency is to provide healthy functioning of credit system and secure the rights of depositors. It was established in 2000 and did pretty good job to solve the banking problems in our country. Currently, 52 banks are operating in our banking sector, healthy and sound. After the banking rehabilitation, our government decided to solve accumulated problems of non-bank sectors. The RSA had good expertise and staff in the field of finance. Therefore, it was considered as the best choice for the job. At the end of 2005, BRSA became also responsible for the regulation and supervision of non-bank financial institutions. As of today, we have 56 factoring, 22 leasing, and 15 finance companies under our supervision. As you know, medium and small-sized enterprises assume a great part in our country's economic activity, but they could not get enough share from financial resources of banks due to their high credit risks. As an alternative to banking, BRSA considers asset-based financial techniques as an effective tool of financing for SMEs. This gives my institution enough reason to support these financial techniques and shapes our regulator and supervisory approach for them.
Excuse me, Ercan Bey. May I ask the other participants to mute themselves? We are hearing another voice, so we can hear Ercan Bey here. Thank you.
I am confusing also.
Yeah, there are some other voices. Okay, we are listening
okay. In the determination of legal framework and activity principles of non-bank sectors, we take account the fact that factoring, leasing, and finance companies are non-deposit financial institutions. Therefore, they do not need tight regulations like banks. Aim of our regulatory approach for these companies to contribute healthy development of sector, to improve its capital level and corporate culture, to provide competitive environment for market participants. To achieve our objectives, firstly, we establish a new department within the BRSA. Then this department prepared a series of regulations and projects restructuring sectors. With these regulations, we determined the establishment and operation principles of non-bank companies in 2006. Then we prepared uniform accounting plan in 2007. In addition, we set up a digital data transfer system for periodic financial reporting. Finally, at the end of 2012, financial leasing, factoring, and finance companies law was put into force by Turkish National Assembly. With these regulations, we introduced new rules for non-bank companies. After that, we gave reasonable time to non-bank companies to adopt them. We called this period adaptation process. Adaptation process means relicensing process of companies according to BRSA's new rules. Adaptation process carried out over documentation and on-site examination for each non-bank company to check their compliance levels to new rules. At the end of this process, 25 factoring companies could not comply with our new regulations. Therefore, BRSA cancelled their operation licenses and they exit from sector. Today, we have 56 factoring companies under BRSA's regulation and supervision. In terms of ownership structure, 12 of them are bank-owned companies and 44 of them independent factoring companies. We apply the same rules for both types of factoring company in respect of regulation and supervision. However, as a principle, same supervisory team generally audits bank and its subsidiary for consolidated supervision purposes. Thank you.
Okay, thank you, Ercan Bey. So it is, we are hearing that you have a very good automation on reporting the whole non-bank financial institution system also. So thank you for a brief description of your role and responsibility as a regulatory body. So now I would like to ask Filiz for the second question. Filiz, could you introduce us Association of Financial Institutions? What is your association's contribution to the development of factoring sector, and what is your areas of activity, role, and responsibility in this part of the financial ecosystem in Turkey?
Thank you, Betul. It is a kind of you introduced us, and I say also hello to all my colleagues. To answer this question, actually, firstly, I would like to give brief information about the history of the factoring sector in Turkey. There are two important milestones. The first one was in 2006, and the second one in 2012. As my colleague, Mr. Caliskan has already said, in 2006, the regulation and supervision of factoring companies were assigned to the Banking Regulation and Supervision Agency, BRSA for short. And since that year, there has been continuous progress in factoring regulation driven by the BRSA. Comparing with UK market, actually there is a strict regulation in Turkey but we really needed it. And we did it with the BRSA together. The second milestone was a law on leasing, factoring, and financing companies passed in 2012. This had an uplifting impact in terms of the reputation of the sector, as well as yearly growth of the factoring turnover. And as a result, the 2012 law provided a boost for factoring in Turkey. Before that, before the law, unfortunately, the Turkish factoring sector was known as a loan shark. And therefore, we believe the existence of such governmental support helps the finance sector to gain the confidence of the corporates, reach its target markets, develop itself, and become more consistent. Concerning our association of financial institutions specifically, it was established in 2013 as a semi-governmental umbrella organization for 3 major non-banking sectors in accordance with the 2012 law. And our association represents for the time being 22 leasing, 56 factoring, and 15 financing companies, which makes a total of 94 member companies. And before this association, there were actually separate associations for each sector. And the law was shaped by the BRSA with the consultation of these associations. Therefore, we really appreciate the BRSA very much for its support to our sectors. So as the Association of Financial Institutions, we are an umbrella organization. And the board of our association comprises 15 company executives with 5 members from each sector. And separately, each sector has also a sectoral representative board that works for the related sectoral matters and feeds back to the board. The association is also professionally managed by the Secretary General and 3 Deputy Secretary Generals representing 1 sector each. For instance, as Deputy Secretary General, I represent the factoring sector in the association. Our semi-governmental association represents these 3 major non-banking sectors as one voice in front of executive, legislative, and judicial authorities more effectively than before. We believe we are more stronger than before. Yeah, stronger together. Here, I would like to stress that if there is a success story to be talked about in Turkey, it takes its power from the cooperation with the public authorities and the stakeholders, including non-governmental organizations, banks, other players in the finance sector, corporates, media, and international organizations under one umbrella organization. And besides this, additionally, as a role model for other developing countries, we have other essential tasks, such as define and conduct ethical codes for the sectors, provide statistics, develop relationship with international organizations such as EBRD and FCI, set up the digital system, which is known as Receivables Recording Center for all assigned factored receivables to the factoring companies and banks in accordance with the related article of the law, investigate international best practices and new products, manage designing and implementation of fintech solutions. As an example, we have recently implemented a trade chain finance system which connects financiers with SMEs through a digital platform. Also, for risk management of the clients in Turkey, our members are really lucky because they have access to 2 digital solution platforms where the client risk data is registered and shared among the non-banking financial institutions and the banking system. The first one is Risk Center, and the second one is known as the Credit Bureau, which is open to banking and non-banking institutions. So I hope it was clear enough. And now I'd like to make a summary for you. Taking the non-banking finance sector to the next level, we believe is a journey. And during that journey, there are key objectives: to be one voice in front of executive, legislative, and judicial authorities, adherence to the codes of ethics, synergy with other financial sectors, cooperation with all stakeholders, centralization of the database, global know-how transfer, information sharing, digitalization, education, and last but not least, to get support of the government. Basically, the last point is the most significant one because it is influential in creating a structure for future growth. It has been not easy, but it has been really very worthwhile. Thank you, Betul. This is the end of my first answer.
Okay, thank you, Filiz. We are following closely your successful representations of the factoring industry in the face of the regulation and also developments that you created as an association in the digital solutions of the industry. But of course, there are some other corporates that are supporting you very well. One of these corporates is the credit bureau. So I want to ask now Mr. Koray Bey to their activities. Koray Bey, could you please explain us your services provided by the credit bureau to the financial system?
Thank you, Betul. I will briefly go over what we do in the financial system in terms of risk management, of course. The Turkish Credit Bureau is called KKB, so I will refer it as KKB in short. KKB was established in 1995 by 11 founder banks in Turkey in order to collect and share risk-related information between the financial institutions. It became operational in 1999 after 4 years of preparations. Today, it has 455 employees serving to all financial sector for different purposes. We have 9 shareholder banks. It means that we are owned by the banks themselves, and 3 of them are the state banks, and the remaining 6 banks are from the public sector. These are the shareholder banks, but when you look at our member organizations, which means the data that we collect from and share to, are 177, I can say almost 180 banks or financial institutions are actually sharing data with KKB, which constitutes all the financial sector in Turkey. So there is not any single organization left outside in our system. All these financial institutions are like insurance companies, consumer finance houses, factoring companies, banks, participation banks, leasing companies, and all of them. So share their information with KKB. When we collect the information, we share it based on different rules. For example, the banking sector has their own rules to share and collect information, whereas the factoring companies have their separate rules. We not only serve to financial sector, but we also serve to the individuals also, to the trade companies, and also public authorities in different cases. Currently, we have around 80 different products and services that we provide to the market. I can classify them in 5 different categories. One is traditional data collection and sharing business, which is actually, you can say, a traditional bureau business. We collect data and share data based on rules. Second, we create value-added products and services with the data we collected. We not only collect and share the raw data, but we create different products from this data. I can say the scorecards, for example, risk-related solutions, or a benchmark reporting system, or so on. The third one is the cybersecurity, fraud prevention and authentication services. Again, with the data we collected from different organizations and also with the technology we put behind it, we can provide different security services to our members. We currently have 6 different fraud detection solutions we provide to the sector. The fourth group of services can be called hosting and cloud. We have a separate data center in Ankara, which we give disaster recovery solution to the banks. And also from this data center, we are currently creating a national cloud ecosystem for the financial institution, which is a very sensitive sector for data sharing even in Turkish boundaries. And the final product family is digital transformation, which is actually digitization of all banking products and services for the consumers or to the companies within a framework of operational efficiency and centralization. So these are the basic products and services that we can say. Last year, I can say actually this year in 2020, we had 2.5 billion transactions coming from different financial organizations for different purposes for all those 80 products I mentioned. In the KKB data center, I mentioned we have the Tier 4 world standard infrastructure design, which is the one and only credit bureau in Europe, and I can say maybe in the world that has this Tier 4 standards. And we have the Turkey's first and world's 5th green data center with LEED Platinum certificate. So this data center is another actually business area for KKB, where we support all the financial institutions, business continuity issues, and the cloud infrastructure requirements. These are all the services that we provide currently to the financial sector.
Okay, thank you, Koray. As I was one of the representative of a factoring company in the previous years, I must admit how life-saving is your reporting for the credit people, because they can observe all the history of the companies and the credits, all the credits and the details of the credits of the companies, and of course the others that you already explained. So thank you. I would like to go back to Ercan Bey, that we already talked with Edward about the UK market. As he mentioned, there is no law on the UK market, which is also a very developed market. But for me, the emerging countries, the law and other applicable regulations are vital for the credit system to function efficiently and develop the financial markets and financial stability. So the law for non-bank financial institutions was approved in 2012 in Turkey. We want to listen from you. What were the gains of the law in the factoring industry in Turkey? Can you share the developments after the law in this sector?
Thank you, Betul. As you said, financial leasing, factoring, and finance companies law, enacted at the end of 2012, is the most recent and very important regulation for our non-bank financial institutions. ERSA prepared the law in close cooperation with sector representatives. New law brings major changes for factoring companies. With law, first time, factoring companies are defined as a financial institution. This legal recognition contributes to reputation and credibility of factoring companies as a financial intermediary in our domestic financial market, and promote them in the eyes of the existing and potential clients. Secondly, law constitutes a legal framework for the establishment and operations of factoring companies. It regulates key areas for companies such as establishment and operation licenses, minimum capital requirement for companies, criteria for funders and executives, establishment of internal units and systems, judicial and civil money penalties, cancellation of operation licenses. With these provisions, the law provides a stronger legal framework, increases the effectiveness of sector surveillance and supervision, urge companies to operate with strong capital base and corporate culture. Thirdly, establishment of association of financial institutions is a significant gain for our factoring sector. All factoring companies should be a member of the association. The association is a professional organization in the nature of public institution. Therefore, ERSA believes that the association sets strong ethical standards for the sector, builds a bridge between companies and government bodies, and contributes sustainable growth of factoring market. In addition, with law, Receivable Recording Center was established in 2015 under the association. This system created huge database for commercial receivables and prevented double factoring finance and fraud in the market. For the next term, digitalization of factoring transactions and application of supply chain finance emerge as a challenging innovations in our domestic market. The ERSA supports the association's efforts in these areas and ready to contribute the legal framework. In 2006, the ERSA took over 88 factoring companies from former authority Turkish Treasury. After BRSA's regulations, financially and institutionally poor factoring companies could not comply with our views and exit from sector. Today, we have 56 factoring companies under our supervision. In spite of decline in number of companies, our factoring sector is stronger in terms of transaction volume, capital level, and corporate culture in relation to the past. In conclusion, we believe that our sufficient and effective regulations and supervision contributes healthy development of sector and create a value for market participants. Thank you.
Thank you, Ercan Bey. Of course, the law brings many different many different solutions for the Association of Financial Institutions, and they developed under the association many solutions for the sector, and this leads to digitalization in the sector. So I would like to ask Filiz, what are these digitalization solutions, and which of the corporates that you are working with, which solutions that you serve to the factoring industry on a digital solutions?
Thank you, Betul. Spiros, could you please open the first slide? We believe in Turkey, the future of the factoring sector depends on digitalization. Therefore, since our establishment, we have been working very hard on development of innovative digital solutions, where we are combining trade finance products with technology. And the second slide, please. The first IT platform, Receivables Recording Center, was introduced in 2015. And in domestic transactions, single invoice discount is very common in Turkey. And it is also very common to use multiple banks and financial institutions, unfortunately. As a result, multiple assignment of the same invoice was a real problem in Turkey. In order to prevent multiple assignment and financing, there were some old operative methods. Our members had to control each original invoice physically. If it was already assigned to another financial institution or bank with an assignment level on it. Can you imagine each original invoice should be controlled, checked by factoring companies. However, of course, this physical control of each factored receivable was very difficult and risky. Therefore, the joint decision of the BRSA and our association was to create a receivables recording center, and it was added to the 2012 law as an article that gives the duty of the implementation of the Receivables Recording Center to our association. We chose as the service provider of this new system, Credit Bureau, which is also the service provider of the Risk Center under the management of the Banking Association in Turkey. And Credit Bureau has an important role in risk management of the finance sector in Turkey. Briefly, the purpose of the Receivables Recording Center is to have one platform where all assigned receivables are posted by the factoring companies and the banks to prevent again multiple assignment of the same receivable while financing mostly SMEs. This platform works online and is integrated with the invoicing system of the Revenue Administration at the Ministry of Treasury and Finance. With this integration, the platform also verifies e-signatures of the e-invoices, which is very, very supportive and important for our sector. Since its inception, 30 million documents have been recorded into the Receivables Recording Center, and more than 950,000 double assignments have been prevented as of today. The e-invoice ratio has risen from 23% to 80% within 5 years. I believe similar platforms could be used in many markets, in many developing markets, where there is a risk of multiple usage of the same invoice for financing. And next slide, please. Our second digital solution is the Trade Chain Finance platform, which was created last year. And the main objective of this platform is to connect financiers with SMEs through a digital platform, thereby reducing their funding costs. Suppliers, buyers, banks, factoring companies, participation banks, credit insurers, and all types of financiers should be users of this platform. The main focus of this platform is supply chain finance, but it also covers the products of all traditional factoring products, non-recourse, invoice discounting, export-import factoring, and additionally, credit insurance system and Islamic factoring. It is also integrated with the Receivables Recording Center and e-invoicing system at the Ministry of Treasury and Finance. As a conclusion, I believe such complementary systems creates a digital ecosystem which protects the finance sector against fraud and operative risks while increasing SMEs' access to finance with reasonable funding costs. That's all.
Okay. Filiz, thank you. We have been witness the benefits of the Receivable Recording Center in Turkey. especially to prevent double assignment, double financing, which is very, very important for the even for factoring companies and for the banks. And we are seeing that the digital solutions are increasing in all financial ecosystem, but it's also the fraud cases is also increasing, because we usually cannot talk about the common database. So the creating a common database offers significant advantage for users. So I want to come to Koray, that you are creating a common database and offering a common informations for the financial system. One of is the invoice registration center. So could you please give us the information about this invoice registration center and some other solutions of the credit bureau, the common database solutions for the banks and the non-bank financial institutions? You're muted, Koray.
Thank you. I'll start with the RRC then first. This system is actually owned by the Association of Factoring Institutions. We are operating the system on behalf of them. So we're not the legal owner, but we are the technical operator. Okay. When we first established the system, we sat together with the association and created all the rules, the process flows and everything. And then started the system live. I think it was in 2013 or 14, maybe Filiz may remember better. Anyway, so what we do, we first register each credit transaction, record the credit transactions in the system, and try to prevent fraud by actually avoiding the double financing of the same account receivable. We have a singularity criteria in the system. This singularity criteria is based from tax ID, invoice number, invoice date, and the invoice amount. When we link all these criteria together, we create a single receivable number, and then we make the unification based on this number. The slide on the screen shows the basic process flow during the transaction. It starts from the left top corner from the seller. The first one, seller sends this invoice assignment requirement to the financial institution, which is the factoring company. Factoring company first registers this receivable and then checks our database whether there is any other registry with the same receivable through web service. But if they don't have the potential to write a web service, technical potential, then they can also use our web screens instead. When we receive the requirement, we do the checking and we check whether this is an electronic payment, electronic invoice or not. If this is an electronic invoice, then we check the revenue administration system whether this electronic invoice is valid with the electronic signature, as Filiz mentioned. When we verify the electronic invoice, then we send the proposed request back to the financial institution with the validity, and then the financing institution turns back to the seller with the financing amount. That's the basic flow of the process. Within this process, actually, I can mention this is completely built in KKB, so no factoring company has to make any IT investment for this. This is working 100% on the cloud in KKB data center. And of course, it has all the business continuity issues considered in the process. So whether there is a problem in the data center, we can actually automatically switch to the disaster recovery center, which is very cost effective actually for the factoring companies. and all the connections are encrypted and secure between the companies and the seller and the KKV. Within this system, we have 56 companies. Don't go to the next slide yet. We have 56 factoring companies and 24 banks already using the system. Not only factoring transactions are registered, but also the receivables given as collateral to the bank credits are also registered in the system. So we prevent double financing for all types of receivables. In the system, there's roughly like 5 to 5.5 million transactions per year. And as Filiz mentioned, we have currently so far prevented around 1 million transactions, double financing transactions so far. Again, in the system, there's an opportunity to send a single inquiry. Also, there's another opportunity to send bulk inquiries. So you can make a list of all your inquiries and send it in one file, which is very operationally efficient. You can search for an electronic invoice status in the system. You can search for payment instrument inquiries. Also, you can add single receivables, or you can add multiple receivables in one transaction by just uploading a data file. You can do the monitoring in receivable monitoring inquiry, and transferred receivables monitoring are also possible in the system. Now we can switch the slide, please. If you talk about the benefits of the system, first, the receivables are saved in RRC via web service integration or web screen. So it's efficient for integration. If you don't have any IT resource, you can actually start using the web service instantly. The web screens instantly. It prevents double assignment and financing, of course, works online and integrated with the systems of Revenue Administration Office. The system verifies that the invoices are arising from a real trade transaction by this within this validity process. It verifies the IDs and VAT numbers of the sellers and the buyers to prevent fraud. It collects the payment information of the factored receivables also, consolidates all data related to the assigned receivables of the Turkish factoring industry, and it has the reporting functionality for all the registered files. I can say this is the functionality in a very brief way. If there's any questions, we can try to answer.
Okay, thank you, Koray. Thank you for all the speakers for explaining how the system works and what is the requirements of the law. So we have a couple of questions from the audience. I think Ayşen will reflect the questions on the screen that we can see it.
Okay.
Before coming to the question, so maybe I just would like to mention I just would like to ask the speakers, maybe Filiz or Koray will answer me, because it is also, the cost side is also important. So how you structured how the financial institutions benefiting from your services, Koray? Are they paying you? Are they paying the association? How it works?
The companies are not directly paying to us. They are paying to the association a membership fee to use the service. We are charging our costs to the association. I must mention that we are a non-profit organization, so all the IT investments and operational costs are covered by KKB. We only charge for these operational costs and the maintenance of the software.
Okay, so the members are paying to association as a membership fee. Is it a monthly basis or yearly basis, Filiz?
It is monthly basis,
okay.
And it is a usage fee, and it is standard for each company, for each member.
Okay. Mm-hmm. Okay, so we can come to the questions. I think we have time to answer 4 of them. I can see we have 4 questions. The first question is for the credit bureau. I think, Koray, you can answer this question for us. We're in Turkey, a situation when several credit bureaus works and completed for clients. If yes, but I will not go because it is not the situation. So I'm asking, giving the word to Koray to answer this question.
Well, the answer is no, as you said. Since the establishment of Credit Bureau in 1995, KKB is the one and only credit bureau. So we never had a problem of obtaining more than one credit file for a single client. The coverage of KKB is 100% in terms of the financial risks.
Okay. Our second question is for Ercan Bey. It is, what are the key licensing requirements for factoring companies according to the law? I mean, in the beginning. So looking at the market situation now, do you think these licensing requirements have to be further developed or changed? So as far as I heard that, because I couldn't remember the number of the factoring companies before the law, I think it is about 985 something.
88.
88, okay. And today we have 56 factoring companies in the market. But of course, it is not the numbers diminished by the years, but it is also for some other reasons. So, Ercan Bey, what are the key licensing requirements for the factoring companies?
I will try to briefly mention about them. A company must be established as a joint stock company. A number of founders should not be less than 5%. Paid-in capital not be less than 50 million Turkish liras. Actually, in action of the law, it was the 20 million Turkish liras. But with the appreciation of Turkish liras, we raised this amount to 50 million Turkish liras for paid-in capital for companies. Companies' article of association shall comply with the law and regulation. Founders and board members meet the conditions listed in the law. I'll talk about a little bit qualification for founders. Founders must have commercial credibility. Also must have a clean crime record. Founders should have adequate financial strength and credibility. Also must have integrity and competence required by the work. We have two-step authorization to establish a factoring company. First step is establishment license. In the first step, we are trying to get to know the founders and if they are credible and financially strong people and there is no connection with criminal activity, our decision-making body, banking regulation and supervision board approves the first step, establishment license. Then we are giving the factoring company 6 months to pay its minimum capital requirement and form its business organization. After that, company certified as it meets the criteria in the law, and we send our assessment to our board, and if our boards approve, factoring company will enter into the sector. This is briefly how we authorize a factoring company.
Okay. And
for at the time being, we have believe our licensing requirements is adequate for the companies. We are not considering changing them.
Okay. Okay. As far as I know, it is also clearly stated in the law.
Yeah.
Okay. Okay. So thank you. We can move to the other question. It is for Filiz. Is digital invoicing infrastructure critical to the receivable recording center? How receivable recording center is used by the revenue administration?
Yeah, yes, it is. It is really very critical because now the ratio of e-invoicing invoices in total factored assigned receivable is 80%, and therefore the infrastructure of the e-invoicing as well as this e-invoicing system at the revenue administration is very critical for the finance sector. Actually, it is beneficial for our factoring companies and the banks who are also doing factoring business, because with this system, we check the e-signatures of the e-invoices and we confirm the validity of the invoices, of the trade, actually. In the past, before the receivables recording center, there were fake invoices which were assigned to the financial sectors for financing purposes. And there were lots of fraud cases. But on the other hand, if it is used by the revenue administration, actually it hasn't been used by the revenue administration yet. Just our sector, financial sectors use it, but maybe in the future they will take some statistics from this system. We will see. Nowadays, it is not used by them.
Okay. Okay. So Filiz, maybe we must also mention that by the law, it is compulsory to use the receivable recording system. So without registrations, their invoices, the factoring companies or the banks, they are doing factoring, they have to register their invoices before they lend the money.
Yes, that's correct. And according to the law, first of all the factoring companies have to be members of our association. And secondly, all the assigned, actually factored receivables should be entered to the system. And this means not only the factoring companies, but also the banks.
Okay, so it is easy for them to detect the fake invoices, double financing. Okay, let's move the other question. Who is the owner, developer of the TCF platform? So it is...
the owner is our association, the Association of Financial Institutions. We have created this platform with Betul, actually, when she was working as general manager in our factoring sector in Turkey. And we did it together with our members, because it is really very costly, and also data protection is very important. If you consider the bank subsidiaries, then maybe for them it is easier, but for the independent companies, we have 56 factoring companies, but just 15 of them are bank subsidiaries. The rest is the rest are independent companies. We established this platform for all our members as midpoint for suppliers, buyers, and financiers, companies or banks, or the banks.
Okay, so we can move to the last question. Did invoice registration system already existed, or factoring association and regulator cooperated with the revenue administration or treasury? So I think it's a joint, anyone who wants to answer this question?
Actually, this system was established at the beginning of 2015. And within 5 years, 30 million documents was registered to the system. And this is our under our association, under the management of our association. And also the regulator of this platform is the BRSA. But also, according to the law, our association was assigned to establish it and also make sub-regulations with the cooperation with the cooperation of BRSA.
Okay. So thank you for all of you for joining us today. And Ayşen, I think we can move to the next panel.